is something, especially since the raise of capital. The macroeconomics is a must-have in all the platforms that you mentioned. So every company is becoming a fintech, and then selling insurance is the logical next thing, right? We did a survey. I think it was 85 of the fintech executives understand that fintech is a must-have, and it can contribute up to 10% of the bottom line. So if you go to Asia, China, Southeast Asia is massive across e-commerce, mobility companies, fintechs, you name it, right? The same is happening in Latin America. I think also because people is much more creative. It's much hard to raise capital, and then there's this resiliency on the people from Latin America. I spent 8 years there, so I'm very familiar, and that willingness to self-sustain the business, open the opportunity to do that. I think a little bit behind, I will say, Europe and US. Basically, I think there's two different stories. US regulatory 51 states, 51 filings that you need to do. So if you would like to launch a product in the 51 states, it takes more than a year if it's a new product, right? And then if you think about big tech and players, that they are focused on their core business, right? The insurance is not kind of the thing that they are thinking, right? They are well founded, and they're thinking in their core system. Europe, if you look in the broader perspective, there are no big European players on the e-commerce. The majority are US or other parts of the world, or fintechs, right? And then there is the whole dynamic with regulatory protection. So I think it's lacking a little bit of the tailwind from innovation, from my perspective. So it's there. I think it's catching up, but it's not the maturity that you have in Southeast Asia, China, or Latin America.
Maybe Nasser, if I can come to you, we talked a little bit about global, we see things that are happening in Asia, we see things happening in Latin America, maybe not so much in the US and Europe. We'd love to get an idea of locally what's QIC looking at, and how's it looking for you?
I think locally, we are not at the level where they are in the rest of the world. In terms of embedded insurance, I think the traditional embedded insurance products like credit cards and stuff like that, this is where we are at the moment. But I think I was talking to my colleagues here on stage. I was very inspired by the things I've heard here during this conference. Moving forward, I think this helps us understand where the rest of the world is, and how we can, as a regional player with presence in different countries within the region, find partners to build something where they add value to their customer, where their customer does not need to purchase insurance directly from us, where they will have some value added to the product they're selling to him.
Excellent, thank you. Maybe Magda, if I can come to you a little bit, one of the things that we always hear about, is that, there's always a transformation that's going on in an insurance company. I think that's one of the constants that's always there. They're always talking about a transformational project that's going to be there. I want to get a sense from you is, are you seeing incremental transformations at the insurance companies? Are you seeing genuine, leaps forward at transformation companies? Where do you see the technology at these insurance companies right now?
And if I can bring that back to embedded insurance as well, right? So to me, it's always this question about when I look at embedded and transformation, and should we actually become more visible or less visible? Should we have to interact more with our customers or less with our customers, right? There is always this this back and forth towards what is the role of the insurer, and that actually finding out what you want your role to be really impacts the way you are going to deploy technology. So customer centricity and going more towards the customer has been about generating a lot of data and visibility and making insurance a visible product. One of our main problems as an industry is that our product is just not visible. And if you look at behavioral science, visibility is a key driver in changing people's behavior. when you do look at embedded insurance, and it's like, well, it's a growth play. I need new distribution channels, so I'm going to use affinity channels or embedded channels to put my product in it. And if people really perceive if the product is from me or not, and if they are actually valuing the insurance, or I don't know, I mean, most of you are probably overinsured. You have 5 credit cards, and those credit cards you have insurance, and you have no clue. And if something happened, none of you is actually going to think, oh, I think I have a credit card insuring me against this, right? So at the end of the day, we have to ask ourselves, do we want to do that to an insurance product? And are there certain risks where that makes sense? Travel is a very good example, and others that do not make risk. So the transformation we've seen in insurers is, how do I get the data to understand my customer more and iterate my products? And the embedded insurance play actually initially went against that, right? So you had one product that was a commodity, you had a channel. I mean, banks have been doing embedded insurance way before it became a hype and a term, right? And it's one product that fits or should fit everyone's needs. That's not the case anymore. So now we're seeing brilliant channels, including those in Asia, right, that have behavioral data across a multiple types of behavior, that use that transactional data to embed insurance with a product that is dynamic and that can react to the risk profile and to the need profile and to the data profile of a customer. Or for the same customer, different needs across time. So I think that's the future. The future is a product that is able to evolve very quickly, that is data-driven in its design, and that can perform as a dynamic product in embedded and in non-embedded channels. And many companies, Chubb included, so I'm actually allowed to mention this, are looking at that, are looking at, you take a product with Nubank in Brazil or with another embedded channel, and you generate certain data, and then you don't know, is the product performing well, is it not performing well, is it performing well or not because of a design or a pricing issue. So you need to generate all of those data at a more granular level so that you can evolve them. And I think that's what transformation is going. It is kind of, converging the technical pricing and underwriting aspects of risk assessment with things like product design and channel analytics, which is where embedded also comes in.
Excellent, excellent. Thank you for that. Karthik, maybe if I come to you, I mean, we talked a little bit about the technology. The technology is getting better at the insurance companies. We as a VC, we obviously have Insurtech companies that are with us, that we invest in. One of the things that's been interesting to us is that, we'll find, really great Insurtech companies that are out there. And they're always looking, for example, for capacity or something to do so that they can work with the insurance companies. Now, without mentioning some names who are also investors for us, what I find is that sometimes the technology stack that they have sometimes is not even able to actually intake information from these startups. And so you're starting to get these guys who are saying, do I have an API that I can give you information? No, what you need to do is you need to email me an Excel spreadsheet, and then that's how we do it. I think all the thing I'm asking you here is how do you feel? I know that you've been saying that you're going to start doing insurance as part of your product. How do you feel is the readiness of some of the insurance players out there so that they can interact with you, who's a technology first type of player?
We have a double whammy of a problem. So you've got that, but also we're trying to insure something that's never been insured before.
Oh, wow.
And so regardless of whether technology exists or not, for what we do, there's definitely no technology today, right? So I can't expect, I don't expect insurers to have that. I mean, of course, there's the normal challenge of, the bordereaux and things like that, which facilitate the process of interacting with an insurer or your capacity. For the way I think about, for us, the technology that we focus on and that we bring into our insurers as well is the broader challenge, right? So we're solving a specific problem of understanding, managing, and protecting against those risks of these models, which means our technology needs to be able to quantify and scalably do that very quickly. And then how do we give that to both our capacity providers, perhaps as a means for them to scale as they adopt AI, and then for us to have the pen to underwrite better, right? And from there, we're able to pass on this information We still haven't figured that out, honestly. That's, I guess, what I'm trying to say, because we're still in the process of, even convincing that this is an insurable risk in the first place.
Wow. Nasser, maybe if I can just kind of go to, continue on with that. I mean, technology, some are saying, they're still working on it themselves. There's obviously lots of, investment that's going in. So one element of being able to work with insurtechs or being able to build, embedded financing solutions is the technology. The other element is like there has to be an internal culture within the companies to accept, to make changes. I just want to get a sense of, what's it like within QIC? Are you looking to work with the insurtechs? Is there that, build quick, fail fast type of mentality that's there?
I was hearing the keynote speaker earlier today. He was talking about naive optimism.
Yeah.
And this phrase stuck with me, like, because this is what I work towards, to be honest. Like, I am pushing to find the right partner to help us in terms of finding like solutions, innovative solutions for embedded insurance. We've all seen like the classical embedded insurance, like that's available in Qatar, but I think like following this conference, I think the ceiling is like
Very high.
very high, honestly. And I feel like being a regional player, being not only based in Qatar, being based in the region, I think we have the opportunity to further develop partnerships for embedded insurance with other regional players, to be honest.
So maybe if I can ask that, because there's probably some startups in the room. If the startups in the room wanted to work with QIC, shall they just take your email address
Absolutely.
and you can help them sign some
Absolutely.
contract?
I mean, people in QIC know me as the person, the go-to person for like innovation and change. I wouldn't say like call myself a millennium, but like we grew up with technology, and we know how technology is developing and changing the way we do everything in our life. And MIC Micro Insurance
MIC Global,
yeah, they were talking about everything being available on the go for a minor like amount to have income disruption insurance. We see the need for that in Qatar for some of the different segments of the population. Qatar is a very diverse country in terms of purchasing power. So we see the need for micro insurance, embedded insurance here. And yeah, if anyone would be able to help us with that, why not?
Inshallah. I just wanted to share because I heard about a company this morning which was really interesting because we're talking about embedded insurance as something makes it super easy to buy the insurance. But I heard something this morning about a company that what happens is that they not only help you buy the insurance, but they help you with the whole insurance process. So for example, if you drop your phone on the floor, it can understand that you've cracked your screen and it will automatically send a message to the insurance company with the claim. And basically, by the time you pick it up, it'll basically say there's a claim that's being processed so that you can, change the cracked screen. So I just wanted to say, embedded insurance is like phase one, but the whole process, is something that's really interesting. I wanted to talk about maybe the AI component of it. When you think about like AI in embedded insurance, where do you think that comes in?
So to me, AI in the process of embedded insurance comes in when you get, to an embedded product that can be modified by data, right? So this typical use cases of embedded insurance using AI, and it's using it on the pre-sale stages. So you're using AI to understand what your customer needs when, and ubiquity and timeliness and environmental cues actually increase conversion rates a lot. And so you're actually using AI or analytics or predictive analytics to understand when to offer something in the process and the customer journey of that embedded product. So that's something that's being used today. Most of the, you've been on Amazon, other people like you have bought this. It's the same concept, right? There's a lot of principles of persuasiveness and stickiness that you can activate with predictive analytics. So on the pre-stages of the journey, they're being used. The problem that most of these companies have when they are selling embedded insurance is that they're sitting on transactional data that actually says a lot about the risk and sometimes needs a personalized product, but the product they're receiving from insurance companies is a commodity. It's like, it's pet insurance. It's the same for everyone. And it won't work the same for someone that has an old dog with cancer and someone that has a young dog, right? So essentially the ability for you to be able to have different products and not sit on a portfolio of 50 products, or, the product for young people, for married people, for people with kids, without kids, but a product that can actually reconfigure it because it's modular in its structure and it can react to data that's transactional from the embedded channel. That to me is where, the next frontier of predictive modeling and AI will come. And then you have it also on the servicing side where you can also use it. But I think that's really where we can make a huge difference in having embedded channels reaching customers with the right product at the right time.
Karthik, you wanted to add something?
Yeah, I just wanted to add one perspective. I feel a lot of the conversation here is on embedded in the consumer sense, right? There's actually embedded that you can do in a B2B transaction, so for commercial insurance. And that's something, and I'm new to the insurance industry, so I come with when you talk about naive optimism, that's all I got, right? But the way we looked at it is not as a way to it's more of a distribution channel, one to many. We back startups who build AI systems and need to create trust in their systems. And so we've embedded our product guarantee into them. And so as they sell to each one of their clients, that's an additional client to us, number one. And number two, it creates, to your point, data around risk across so many different areas that we have not seen in so many different industries as they go into them. So that then feeds back into our systems. Okay, how do we need to evolve our risk management or understanding of this risk in domains that we didn't even think about or use cases we didn't think about? So there's another component, right? So it's your sale process is once, you're adding on clients to it, and then you're getting more data to then improve exactly how you cover these products.
Great. I'm going to ask one more question to Gabriel, and then I'd like to open it up and at least get one question from the audience. But Gabriel, on the AI piece, we heard from Tawania just earlier today that they think that 50 to 60% of their back office has some sort of AI, doing the work. You don't have to speak specifically to Chubb, but in general, as you have conversations, within Chubb, but also outside, what do you think that number is in terms of AI adoption in insurance companies?
So AI is very complex and it has many flavors, right? But again, if you think about an industry that is based on data, is insurance.
Yeah.
We are not shipping anything. We are not creating any kind of physical good, right? It's just data. So I think it can touch every angle of the organization, right? Starting from the customer, the backend and everything. I think it's going to be across everything.
Yeah.
That's definitely and expanding on the previous point, if you allow me, I go into and I explained that before, right? And I think all of you couldn't agree more. And I'm so optimistic about maybe the concept of embedded needs to evolve. I think embedded, is not fair, the concept, right? But if you think about the amount of data that we are going to have with these platforms and ecosystems that we are going to interact in the next 10, 15 years, right? Like 10 years, right? How personalized I can create products on the fly. That, to your point, Khaled, that as soon as something happens, this micro coverage that you have gets triggered and you get, your problem solved or your thing replaced or your experience gets better, right? Think about that experience, that is that you pay just exactly for the risk that you're taking. Is super personalized to you, and then when something happens, that gets solved. The growth and the engagement is going to be exponential. It's going to really, but it's going to, Magdalena was saying, we need to reinvent insurance entirely, starting from the data, understand the pain points of the user, understand what he or she is doing in the platform, and then create products from scratch that is a claim-first experience. Even you don't need to file a claim.
Yeah.
And then finding these moments in which we can offer that solution. It could be B2B, it could be D2C, right? And cracking that down is going to be amazing, not for Chubb, I think from the entire industry, right? And that's super optimistic. I'm super bullish, as you can see, but I don't see opportunities around, honestly.
Excellent. So I want to open it up. I just want, if there's anybody that has a question or two. We have global, we have local, we have insurance companies, we have digital transformation, we have a startup. Can I get one question from the audience? There we go. You could just speak really loud. I'll try and, yeah.
So we saw the AI trends, which is mostly used for claim automations, digitizing the internal processes. As Magdalena was mentioning that, critical importance of an embedded insurance to be successful, you need innovative products. Bank assurance survived because there was product innovation happened in the credit card section. When we bring in digital platforms or digitizing everywhere, we don't see many startups or many ideas thrown at using AI for product innovation. Because all about embedded insurance is about customizing to certain extent to cater to certain set of audience. And as Gabriel was mentioning, a lot of data is available. Yes, and that shows what kind of minimal customization can AI use in product innovations can lead to success in embedded insurance, which can also be seen as a new distribution channel. Is there a possibility?
Yes, and it's a great question, and I've been talking about products reacting to technology for a long time. So yes, and we are doing it. So the thing is, you have to define at which level you want to use AI and how you generate data. And as Gabriel was saying, you will have to iterate, your product and a design and wait until the data comes in, which is essentially also what Armilla is doing around the AI risk. So the way this works is we just set up a new insurer, as an example, a new insurer from scratch for an OEM, a car manufacturer in Europe. So we started with everything, with the data strategy, with the product strategy, what is available in the 8 markets they're going to expand, how is the product going to iterate, how do we go from plain vanilla to a product that can react to multiple things, right? And you can end up with thousands of parameters that you want to adjust in a product that generates a lot of cost and that generates a lot of complexity that doesn't always make sense for the market you're going in, because it depends, in the market, everyone's buying plain vanilla. It may be enough for you to innovate on 2 things of the product to actually outperform the market. So there's 2 reasons why companies are not doing it and why companies starting products from scratch can do it. And the reason are legacy systems, sadly, and policy admin systems, because even the newer ones cannot really generate data at component or subcomponent level. And you have monolithic structures for the product. So it's really difficult if you have a platform to manage your products that's monolithic or product-based to actually iterate products. Because if you iterate products and you personalize them, you end up with a portfolio of products that are, in force, that have very different structures. And the tech stack for, I would say, 90% of the companies, if it's not 95%, is just not ready to do that. So the way we're doing it is we're putting layers in between, and then you start, customizing the add-ons that operate like different products, so customizing the bundling. So you can do it, and it is being used. It's still an exception, sadly.
Totally, Magdalena, great question. There is another one, is regulation as well. Think about those products as a playlist of music, right? And what Magdalena is songs, right? So this level of coverage or songs, right? When you are making a product, you are making a playlist with different coverage, different songs. So then in some markets, you need to file the playlist, and then takes time. So that's another factor that in some markets it's also we need to sort it out as an industry, but unleashing what Magdalena is saying on regulatory and technology, I think that is going to be the next level, right? When we unleash the innovation that you are mentioning on AI.
Can regulation be AI driven? Can the regulation be AI driven as well?
I wish.
Well, we have time for one more question. Sorry, there.
My question is to Karthik, actually. How are you addressing the data privacy compliance across the globe if you're processing risk targeted at the individual, given believing that most of the data you require to be able to actually generate a meaningful outcome is processing personal data. Even if you anonymize the name, you still have to process the age, the gender, whatever it is. Is that a concern you're seeing? Is that something that you're aware of and addressing?
In multiple perspectives, actually. So one is, there's two levels to this. What we do actually doesn't touch the data at that level. So we can understand the risk of those models. What we look at is the AI model going to end up causing privacy issues for the company? So you have generative AI models which can actually adversely or create adversarial attacks whereby you can get it to reveal PII information, right? And so we run tests to make sure that those systems don't do that. So that's one aspect. In fact, the EU regulation, part of it is an extension of GDPR into the world of AI, right? The third thing is, because of that, a lot of regulations coming in the US around insurance regulation around bias in models. Insurers have taken the concept of, well, we will not touch any PII information in the training of our models. The challenge with that now, because of privacy information, right? So sort of it's unintended consequences of regulation. Now, when the regulator is saying, well, you need to tell me if your model is biased or not, they're like, we can't test it because we've not been collecting any of this PII information because you asked me not to. So, you got privacy preventing you from using the data, and now you cannot test if your model is biased or not. So we're tackling this in sort of many different angles. But yeah, and from an AI context, it's an extension of GDPR. You have to ensure your models are safe from that perspective. Slow down, yes.
So the music makes us stop. Thank you so much for your time. Thank you for at least giving us a brief overview of embedded. Thank you so much. Thank you so much. Thank you, man.
We're thrilled to see your continued engagement in our summit. Now, let's delve into our next compelling program. Entitled Leveraging AI in Sales and Distribution for the Insurance Industry, this session promises to uncover the transformative power of artificial intelligence in insurance sales and distribution. Guiding us through this fireside chat is Mena Sahib from the Code Consultancy, our esteemed moderator. Joining her are distinguished speakers, Asad Casas from Marsh McLennan Qatar and Yannick, even from The Digital Insurer. Prepare to be enlightened as we explore the intersection of AI and insurance distribution. Without further delay, let's welcome Mena Sahib and our esteemed speakers to the stage.
Good afternoon, everyone. So it's really interesting how we're now in day 2 of this conference, and even the narrative is starting to evolve a little bit on stage. It was very interesting hearing Nasser Al-Mohannadi from QIC talk a little bit about how the incredible conversations we've been having about AI. There is still a question of relatability for regional insurers. So when I was bouncing off ideas with Lars on this session, we wanted to talk a little bit about sales and distribution, because that's often an area of business where insurers and insurance businesses want to tackle first in terms of digitalization because of the returns. But at the same time, I said to Lars, I want it to be a relatable discussion, especially for those of us who work closer with insurers and insurance businesses in the region, because often with these digital conferences, there is a difficulty to relate to some of the conversations happening on stage, however interesting it is. So that's why today I've asked our esteemed panelists to talk a little bit about their experiences either using AI on the ground, and I'm going to start with Yannick, because Yannick, obviously working with the TDI, I was once a student of the TDI, and I know they have a immense directory of case studies and use cases of real examples of how AI is being used. So to discuss the topic of AI and sales and distribution, AI can be used to build marketing campaigns and sales strategies and distribution strategies, and we just heard about embedded insurance a little earlier. So by using AI to understand and translate a lot of the data that we have on our existing customers, consumer behavior for visiting customers or new customers. So can you tell us a little bit, some examples from this directory that you have at TDI, stories of success stories, essentially, of how this has been implemented with other insurers or other insurance businesses, and yeah, let's hear about that. I'd like to hear how it really happens on the ground.
Thanks. So AI, as you said rightfully, if there is one part of the value chain where AI has been used for more than a decade now in insurance, that's really the distribution. Transforming all these data points that are collecting from the initial applicant to the policyholder through services for cross-sell, upsell, retention. These are basically projects that have been existing for quite a long time with traditional AI techniques. So we do have a large repository of use case using traditional AI. What we have done since January is we have built a new library with the application of generative AI across the industry. And we have more than 30 use cases. So 30 insurers have been sharing what they have been doing with Gen AI, and we have spent time to analyze this initiative and bring our own point of view. So very valuable insight for the student like you, so professionals that are going through our educational program that are really tailored for insurer. So to reply to your question, I've selected use case from across the globes, so one per continent. Starting with Europe, where I now live. I've selected AXA from all where we have.